from clients in a personal capacity here at Mortgage HQ, we are finding that a lot of investors are picking up activity because with the interest rates already decreasing by, again, roughly around that 1.5% mark, we're starting to see a lot more cash flow positive properties, which people are, gunning to pick up.
Today, we'll be diving into the latest trends and developments shaping the mortgage landscape heading into Christmas and beyond. We are joined again by Mortgage HQ's Jason Lai, with experience of being a real estate agent and now a mortgage advisor. Jason's expertise has helped countless home buyers navigate the complexities of home financing, and he's here to share some valuable insights with us. Jason, let's get started with our discussion on the current mortgage state and what is the potential for home buyers right now.
I think we're facing a pretty interesting environment, Danny. If we zoom out slightly to the last 12 months, interest rates from where they were to where they are right now, they've decreased about 1.5 to about 1.6% in some cases, in terms of, say, if we looked at the 1-year fixed rate. So that's obviously quite a considerable decrease in that time. Like yourself, myself, and probably a lot of our viewers, and just general Kiwis, they're hoping and anticipating interest rates to decrease even further in the next sort of 6 to 12 month period, and that's what a lot of economists are also predicting.
Yeah, no, it's really exciting. We definitely see people starting to take action now that the mortgage is coming down. But can you give me an overview on the current state and environment in New Zealand? How is it affecting mortgage decisions right now?
Yeah, I think right now we're in a really interesting period. I mean, when you're speaking to people that are actively involved at the coalface of the industry, for example, real estate agents, you're getting mixed messages. Some are finding that there is significant auction activity in their particular pockets. Some are still finding that we're very much in a buyer's market. I think it really, at this point in time, is dependent on the stock and where you're sort of looking. But from clients in a personal capacity here at Mortgage HQ, we are finding that a lot of investors are picking up activity because with the interest rates already decreasing by, again, roughly around that 1.5% mark, we're starting to see a lot more cash flow positive properties, which people are, gunning to pick up.
Yeah. And well, I think with interest rates coming down and, people feeling more positive about lending, in the past we've heard about, tiny lending criteria and the LVRs changing. Has there been any change in that regard?
Yeah, not super recently. A little while ago, the deposit requirement for an investment property, for example, was 35%. Now, thankfully, it's a little bit lower, so it's a 30% entry point. I believe that in the future we should see potentially a further reduction as well, but as of right now, there is no official changes. However, on that point of LVR, I just want to throw this little comment out there for some listeners, because time and time again, we obviously have chats with a lot of first home buyers, a lot of investors, but for our first home buyers, for some reason, a lot of people think that you absolutely have to have a 20% deposit, when in reality that isn't always the case. And so, if you had to have a deposit, and no matter what the figure is, definitely start by engaging with having a chat, because you never know, you might be pleasantly surprised.
Yeah. Often I talk to people and they don't realize they're actually in the position to buy because they expect to have the 20% deposit. So I'm sure that will make a lot of people happy just knowing that that possibility is on the table. Now, on the green mortgages that has become very popular, can you explain what that is and why would that be attractive to some, eco-conscious buyers?
Yeah, absolutely. So these are a pretty great initiative, basically with all the major banks, more or less. Some banks don't have it though. But essentially what this is you can lend up to, in a lot of cases, about $80,000 between 0 to 1%. To basically, have any improvements to your property in the way of, green home loan energy efficient. So this could be, for example, solar. It could be, even getting a hybrid or an electric vehicle potentially as well. So if you're looking at getting these things, super efficient way from an interest rate perspective, rather than actually doing a, full-blown top up on your property itself and paying for the current interest rates available.
Yeah, that sounds pretty interesting if you're definitely looking into doing those improvements or getting, the EV or electric car. Now, we have seen with interest rates going down, some people waiting for the OCR update. they were floating their mortgages, but now we have had the latest update. What are you recommending to people that have been floating on the fixed? What's the plan from here?
I think that answer is really situational and depends on, the particular person's scenario. However, in general, I do recommend that people have both a fixed rate and variable component to their mortgage, especially if they are in a position to be able to make, additional repayments towards the variable component. Typically, this would be in the way of a revolving credit or an offset facility. But again, it is very unique to the individual as well, because from a broader perspective, some people have the type of money personality where they see money and they feel the need to spend it, especially with the upcoming silly season ahead of us. So if you know yourself and you know you fall into this category, have an honest chat with your mortgage advisor and let them know, because perhaps having these types of structures may not be 100% suitable for yourself.
Yeah, that brings up the credit card as well. Not many people realize that it can have an impact on your borrowing capability. Can you comment on how a credit card limit can actually impact the amount that you can borrow from the bank?
Yeah, absolutely. So having a credit card in general can be a saving grace. It can be a great thing as well if you want to rack up those credit card points. However, from the eyes of the bank at least, it will impact your serviceability, even if you regularly pay off your credit card every month before you accrue interest. Because the thing is the way that the banks view it is on the limit itself. So if you have, for example, a $15,000 limit, and you've got one card between yourself and your partner, that could be 60,000 approximately in serviceability that's impacted, even if you pay it off every single month. So a little bit of a tip or trick could be reducing that limit to a more, smaller amount, or potentially just getting rid of the card altogether.
Yeah, replace it with a debit card and go from there, because it can definitely have an impact.
Exactly.
Yeah, awesome. And new boats, we're seeing a lot of opportunities. People are driving around and you can see them everywhere. So more people are, getting attracted to new boats. Can you explain what is the difference on getting lending for a new boat? I know you have like a Linden boat, and sometimes you can do, a turnkey.
Yep.
Can you just comment a little bit more on that?
Yeah, absolutely. So new builds in the eyes of the bank, they typically fall into basically two categories, as you've rightly mentioned. So you can buy properties that are, considered turnkey. Those are generally pretty straightforward. So all you're doing effectively is putting down a deposit, and this can be, potentially 10% with, say, a developer who's building a bunch of these new build properties. And then when we go to get lending, we're borrowing in a lot of cases anywhere between 80 to 90% for our clients. That's pretty straightforward. Now, we can, depending on the bank, get about 12 months pre-approval as well in advance before these new builds settle under that category. So if we're looking to, say, a home and land build, slightly different. There will be progressive payments required at several points in time. So I'd say best to have a chat to see, first and foremost, with the developer what kind of new build, or what kind of financing package is required essentially, and then chat to your mortgage advisor for a more in-depth conversation, because there's quite a few individualized points that need to be crossed off.
Yeah, 100%. Mainly on that land and build as well, is just making sure that, on the cash flow side, people can sustain those repayments without the rental income coming in. So, yeah, slightly different dynamic there as well. Now, can you remind us again, why should someone use a mortgage broker instead of going directly to the bank? What's the value that you can add to the client that's looking to buy right now?
The value added would definitely depend on the client themselves. For example, if you maybe are wanting to build a portfolio, or maybe already have a couple of properties, we could identify to see if the mortgage is, structured efficiently for your particular position, the way that you earn income, any excess income that you're looking to deploy as well, or potentially can even, go as far as talking about property selection as well, and how to build a systematic and sustainable portfolio for the longer term. Whereas maybe with a first home buyer who potentially, hasn't had any, experience purchasing properties, of course, and potentially they don't actually know anybody who has purchased properties before as well. And so maybe they're needing guidance of the, the wider picture, the overall process on how to actually even, put forward an offer. Now, obviously, we're not specialists in that space. We're not lawyers. We're, financial advisors, and we only advise on the mortgage side of things, but certainly can be a helping hand throughout the general process.
Yeah, and again, I think here at Mortgage HQ, beyond just being mortgage brokers, you guys are advisors. You go beyond, just the baseline and getting that loan. But what I love is that you all investors as well. So you've done, your investments before. You have been in that position buying as well. So it's almost like you can comment from your own experience and add the extra value as
Yeah,
well.
that's right. That's right. And another thing as well is rather than potentially going to your bank direct and potentially only getting one answer from them, we obviously work with a lot of different, different banks, all the major banks as well as smaller banks and non-banks as well. And so we will scan market wide to look for the best solution that's tailored to yourself as well.
What, investors can expect in regards to the property market and lending criteria? Do you see any changes in the future?
Let me just get my crystal ball out. I think in the next 12 to 18 months will certainly be in a very interesting time. I mean, I certainly don't have a crystal ball, but what I am seeing is a mixed market at the moment with the government trying to stimulate the economy quite heavily, but also very, very aware of the fact that there are ongoing redundancies across the board, and it's certainly not easy times for everybody. And so I personally believe in the next sort of 12 to 18 months, we should continue seeing a bit of a decrease in the current interest rates we've got available, with further stability from this point onwards. I don't personally believe we will see a very, very heavy reduction, but of course I am only, one individual as well. And with that in mind, I think as a result, because of people's borrowing powers increasing quite substantially due to those, interest rates decreasing, I believe we should see price rises in the near-term future.
Yeah, yeah. And I've seen online on the news that usually every 1% on the interest rates going down, it means 10% increase on property prices. And now people can borrow a bit more, they feel more confident, they go out there, and it's like that supply and demand game. So I think in the end of the day, is always get advice, talk to someone if you're not unsure, and then you can get that clarity for your long-term goals. Thank you so much, Jason, for joining us today. And if you want to get a consultation with Jason or one of our mortgage brokers, you can go on our website or just click on the link below.
Financial freedom. Financial freedom.
Wealth HQ, empowering you to take charge of your financial life.